Good afternoon, ladies and gentlemen. Welcome to the TINYBUILD full-year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your questions at any time and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and will publish those responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll, and if you would give that your kind attention, I'm sure the company will be most grateful. I'd now like to hand over to the team from TINYBUILD. Good afternoon.
Thank you so much, and welcome everyone. I guess I will use this opportunity while people are still joining for terrible AI written jokes to warm up the crowd. No, anyone? No, I literally asked ChatGPT for terrible opening jokes for a presentation. So why did the game developer quit his job? He didn't get a raise. Anyway, that concludes the joke part. We have had quite an interesting year. 2022, everyone read the disclaimer. It's been a year of change and transformation for the company. And if when we listed 2 years ago, we kind of listed in easy mode because all of the markets were up, everything was doing great. Right now, we played last year on extreme difficulty. And if anyone plays Dark Souls, when you play that in extreme difficulty, that's what it felt like. That said, we did go out on top. And today we want to talk about the results and share some insights of what's coming. Today I'm joined by Tony Asenza, our CFO, by John Carnage, our head of cross media, who is going to share some exciting news on Cartoon, and many of you know Jazz, our head of M&A and investor relations. Now, extremely difficult year followed by record-setting results. I think the highlight of the year is that we were finally able to get to a structure, a very decentralized structure, when we had confidence, or we proved that we are able to launch bigger budget games. So historically, TINYBUILD has been in the sub $1 million range. I'd say about 500K was the sweet spot of the budget, including all costs to port the game, localized market, etc. Last year in Q4, we launched 3 over $1 million games in a row, which gave us a blended return on those by end of year of 1.9x. Now, internally, we target 2x as the return over the life cycle of the game. And here we had 3 big budget games that had a really high return very, very fast. We also had a record number of what we call monetizable events. So a monetizable event is many people focus on just new game launches, right? We focus on new game launches and also secondary game launches. Also things like launching new DLC or bringing games to new platforms. And those can be extremely meaningful, and that is why we have such a high rate of back catalog sales, right? Things that we launched in the previous calendar year. Then we'll talk about our decentralized cross-platform publishing pipeline, which enabled us to deliver a lot of games to many platforms, and how we can, with a high degree of confidence, forecast if it's worth to bring games to consoles, which can sometimes be or cost more than the actual game's developer. We have numerous examples of that. And we will also talk about our strategic initiatives in events and cross-media. All right, the highlights of the year, I'm sure you've seen that, and now I'm just looking at the camera, and this angle makes me look more fat than I actually am. So I'm gonna try to button this, let's see. Everyone who has like a little bit of a belly knows exactly the pain that I'm going through right now. But we have had 21% revenue growth. Our portfolio grew to over 80 titles. It's still mostly own IP with 77%. The 3 over $1 million games that we launched, and we still have a lot of cash on hand, plus a revolving credit facility. Now, the reason we talk a lot about IP is obvious, and I will still reiterate to people who may have not heard about the strategy. So we started out as a third-party publisher, which means that it's more of a transactional relationship where we sign a game with an external developer, they own the intellectual property, we work on it together, we launch it, and the transaction is that we launch the game, right? The game makes a lot of money, we're both happy, we go our separate ways. Now, the problem here is that usually it's a new intellectual property that you work on, right? And when the new IP becomes successful, it's actually much easier to take something successful and make it more successful. However, in that third-party relationship, the incentives are misaligned. So the developer has no incentive to continue growing this IP with a publisher. They would rather do something else themselves, and that's totally fine. But what I am really interested in is longevity and long-term returns from our investments. So this is why we started investing into IP, which comes with higher profile returns, higher margins, right? So in the example of second party, where we own the IP and not the development studio, we have about 50% margin compared to 30 or even less on third party. And when we bring studios in-house, when we buy them, it's first party and the margins are 80, 90%. Now, we did not do this overnight. It started off 5 years ago. If you see in the middle of the slide, we have fiscal year 17. It was equal third party and our own IP. And then if you look on the left side of the slide, when we launched games like Hello Neighbor, which were runaway hits, we have had a lot of revenue concentration on that hit. And that revenue concentration is going away. In fact, today we don't have a single title that contributes over 15% of the revenues. So this is just to preface the obvious questions about Hello Neighbor 2, because a lot of coverage on that game made it seem like it was going to be a very highly concentrated revenue stream for us. No, we knew exactly where it was, and I'll talk about how that launch did. Speaking of our back catalog, as you can see, we continue to be powered by it, and the formatting on the slide just got a little bit off when it was converted to PDF. So still 80% of our revenues come from our back catalog. And mind you, this is based on calendar year, right? So anything we had launched in December of last year will be considered back catalog. And if we, for example, launch a new DLC or bring the game to a new platform, for example, to consoles or VR, etc., unless it's built from the ground up, it will be considered back catalog. And when I get asked of how long the revenue or the life cycle of the game is for us on average, I don't know. We're 11 years in the business, and our very first published games are still making money. So I'll let you know when those stop making money. A little bit about M&A. Last year, we have had 4 M&A transactions. 3 of them were acqui-hires for studios we have worked with, between the Magic, Size dev team, and Confa Games. These have been partners that we enjoyed working with, and we brought them in-house. It's a very easy integration for us. And in fact, these 3 studios are now working on their game number 2. And this is, again, something that takes a lot of time to learn within the culture of your company, because a traditional publishing business, it's more about contracts, it's more about the product. And then when you bring studios in-house, it's about the people, it's about the creative synergies, and it's about how do you manage internal and external game pitches, how do you prioritize budgets. It's a very different business that took us about 6 years to learn, because our first M&A we did about 6 years ago. And you can't just wake up and decide that you're going to start acquiring studios. It doesn't work. I'm very happy that our studios are now working on their next iterations, because that just shows the confidence we have in them and their ability to deliver. And also we bought the portfolio of Bossa Studios, a London-based game developer, where they could not extract a lot of value from the portfolio. However, with our dozens and dozens of titles, we're able to, because the portfolio, when you do portfolio sales, it scales and you can extract a lot of value. Finally, we're getting some industry recognition, and not to pat ourselves on the back, but we did recently win an award for Best Indie Publisher. Even though not all of our games would be considered indie at this point, it's still great. And if you look at the picture over there, it's like a Thor hammer, and they're like, when they're coming on stage, like, do not take it by the handle. I take it by the handle, and it broke off. We super glued it together, it's great. But a lot of our other titles are being nominated between Spiderheck, Not for Broadcast, and Potioncraft. I'd say most notably, Not for Broadcast is nominated for the BAFTA Awards tonight. So after this, we're going straight to the BAFTA Awards, and fingers crossed. And also, it was nominated for the Indie Games Festival main prize, which is considered as the prime award for game developers worldwide. This is just, I guess, a heads up that we will be holding some information back through the questions, because what I noticed is that when you are fully open about how you do things, Other companies will attempt to copy your homework, and as flattering as it is, it may send the wrong message. So we will be skipping questions on the part of how we decide which games to invest into. That is what we'll call secret sauce, and next time we'll just make these like super spicy sauce bottles with that label. But we use a lot of data to decide what we invest into, and the trick was to verify that this approach works, and it now clearly works with the three larger investments we have done through the end of last year with the bigger game launches. And this is also why we're confident in investing a lot more capital into scaling our portfolio. And with that, I will hand it over to Tony for the financial review.
Yeah, thank you, Alex, and hi, everybody. For the financial review, we'll go through our financial KPIs before diving into our financial statements, and then a breakout regarding the investments we've made. So to start, we'll take a look at our net game revenues. We've seen that continues to grow at a healthy pace, and this isn't only due to launching more titles, as well as with our close partnership relations. It's also based off of marketing new market opportunities such as VR and Roblox. It's also one of the main factors. Also been being able to launch on multiple platforms, not just one platform, but multiple, especially on launch. And lastly, this growth is attributed to the acquisitions we've done. We've seen acquisitions contribute roughly around 20% of the inorganic revenue, similar to H1, with the lion's share being Versus Evil, the third-party publisher that we acquired. The reason why we're highlighting Versus Evil is because even though we see a healthy growth regarding our EBITDA, we did see a decrease in margins, and this is based on the third-party margins that Versus Evil have and currently have. That being said, we've been transitioning Versus Evil to owned IP, as well as working in terms of the synergies between both companies. We're expecting that the margins for this to improve in 2023, but the full transition from Versus Evil having a similar margin profile as TINYBUILD, we're expecting that to come through at the end of 2024. Regarding our adjusted cash from operations, our adjusted cash operations conversion was around 80%. This is as we expected, and we spoke about H1, based off of the timing differences when it came to the games being launched near the end of the year. For reference, any revenue that's earned in Q4 is paid out in Q1, and in Q1 and Q2. And this is due to the payment terms when it comes to our vendors. And our vendors are blue chip companies such as Microsoft, Apple. We haven't received any risk in terms of receiving this revenue. For the next slide, we'll go through our P&L. And the main thing to highlight our P&L is really that revenue growth that we just spoke about, as well as the adjusted EBITDA margins being decreased based off of the acquisitions from last year, from 2022. And just to reiterate and to highlight, the expectation is in 2023, these margins should improve based off of the transition from Versus Evil to owned IP. But the full effect is going to happen, or that we expect is going to happen, is going to be at the end of 2024. When it comes to the balance sheet, this is one of the main slides I highlight. First is the trade receivables. These trade receivables of 23.4 million is based off of revenue earned in Q4, specifically near the end of Q4 due to the launches of our games. And this revenue has been received based off the terms when it comes to our partners. Another thing to highlight is the intellectual property. This shows the acquisitions that we've been doing and the increase of that asset. But more specifically, software development, we've seen an increase significantly in terms of at the end of the year. And what this is, it's the investments that we're doing as part of our commitments to the public regarding investing public funds, not just in acquisitions and in overall growth, but also increasing our portfolio as well as the value and the production value of this portfolio. As to iterate what we had spoken about in the RNS was, when it comes to game development, it takes roughly 2 years from concept to market for it to be released. And sometimes it could expand between 3, 4, or 5 years. And what this means is, at the end of the year of 2022, we started seeing the first games that use public funds come into market. And part of that includes the ROI that Alex had mentioned, the 1.9x. And we'll dive deeper into it later on in the presentation. in terms of those games. However, our expectations in terms of our investments is 2x ROI based off the life cycle of the game. Historically, we've been able to get 2x ROI at an accelerated pace. For lastly, when it comes to our financial statements, we're looking at our cash flow. And what we want to focus on our cash flow is really crossing that bridge between the P&L and the balance sheet. We can see that software development expenditure is significant, and this is due to the investments that we've been doing. It's important to note when it comes to the cash generated from operations, it continues to be healthy. However, we continuously grab this cash from operations and reinvest it into the business. As part of our commitments to an IPO, this is something we've been doing, we've been successful in. Regarding the purchase of intellectual property, we did see it decrease. This is largely due to the large acquisition in 2021 with respect to Versus Evil and Red Cerberus. But we continue to invest our funds into not only our product, but also in acquisitions. To break out our cash spend, this is to visualize where we've been spending our cash regarding the investments and development costs, and showing that it is the majority in terms of our investment as we look to continue to expand our portfolio and diversify our portfolio, not just from what we've previously done, but going forward. That's what we see when we look at the breakdown in terms of that game dev investment. In terms of our game dev investments, we could see that we continuously diversify our portfolio, since we do see our business as a portfolio business. And this is one of the ways that we would look to de-risk the company, is by continuously diversifying the revenues. And with that, I'll give it out to do the strategic review.
Yep. All right, thanks a lot, Tony. I think the really important aspect here is our 5-year plan. And investors who have been following us for the past 2 years, because we have been listening for 2 years, may notice something, and that's we never deviated from our story. We know exactly what we're doing. We're using data to make decisions. And the next 5 years look like all about intellectual property and franchises. So this year we're going heavy on games as a service, and not the traditional, like the Fortnite Battle Pass style. It means that we are servicing our players for most titles that come out, where it makes sense. We release something and we continue servicing the players. Therefore, gas is going to be about the animated series and the bigger titles that we'll start releasing. You will start seeing this year some titles that we have invested in shortly after we went public. Then throughout the years, it will be about scaling essentially the best marketing you can do for your games, which is canonical commercials, which John will talk about in more detail. When we do what a lot of companies did in the 90s, which like if you look at Transformers or Teenage Mutant Ninja Turtles, they have used cartoons to sell toys. So they had a strategic business for making animated series and use those to go ahead and sell higher margin products. So we're going to be doing the same. The idea is that within 5 years, we'll be able to originate IP, not just from games, but also from other medias, because in the example of our cartoon that we're working on, the timelines are actually much shorter for production than for video games. You can make a cartoon once you have a pipeline in less than a year. And that's important when you build a franchise, because you need to have consistent flow of products. You can't just have game number 1 and then 3 years later, game number 2. You need to splice a lot of content in between to get that value up. Then let me see, Jazz, what did you do? The other aspect that we have here is the decentralization. So what we did is, I started noticing this when we crossed about 60 people in the company. Right now we're about 500. Is that when you scale from a startup where you're like a dozen people, everyone knows each other, everyone knows what everyone's doing. As you scale, you inevitably have your marketing person becomes the marketing lead. Your producer becomes the production lead, and you start making these departments, right? And the problem is that when you're in a business that can change overnight, you can slow down on innovation. This kind of structure works when you have something established and very predictable, but when you're in a lead or department director style structure, the best people who do the actual work may have phenomenal ideas and may not be encouraged to go through essentially a web of bureaucracy to get those ideas implemented. So we decided to decentralize. We got rid of the traditional structure, and instead we now have product groups where, let's say, between 3 and 7 people will be working on a range of products, either defined by genre, geographical location of developers, and whatever makes sense. And we empower those product groups to make decisions really fast. And this is how we kept on being successful. And this structure, it doesn't work for everyone. It requires a lot of process in hiring. It requires very extensive personality tests to predict how people deal with ownership and decentralization. But when it works, it feels like magic. It's unlike anything. It feels, even though you're hundreds of people, it feels like a startup where anyone can make an impact. And that's how we ended up shipping games on all platforms. We have increased accountability through the group. We can verify our marketing viability way before launch and predict with a high degree of certainty exactly how our games are going to do. This is the example of the games we talked about. So 3 games launched in Q4, each over $1 million. Average return 1.9x until end of year. So if we do this analysis today, these numbers are going to be significantly higher. And we are now investing into much larger games. Since this is a public presentation, without giving too much away, we're just going to show a couple of pictures on the projects in development. We're not going to do any names, but for example, this is a project that revolves around investing into serious technology that allows you to render thousands of non-player characters on screen. And unlike similar games that came before, where you have like 1,000 chickens versus 1,000 ninjas, and you plot them together, this is a real simulation. The player actually, in this example, runs around with a machine gun, mowing down thousands and thousands of enemies in the field. This is a tech we invested into. And then this is a screen cap from this in-game from our studio in Lviv, Ukraine. They have been working hard on this project that blends the concept of building your own pirate ship in a way, but it's not a pirate ship, it's a giant walking robot in a Dune-like world. There's a couple of more screen caps. This is me playtesting. This is a screen cap from a cinematic. And then this one, it was supposed to play as a GIF. I apologize when we convert to PDF. Obviously, GIFs don't play. But this is an example of Project Ferocious. Look it up. This is a game that's been announced, and it's one of those games that we decided to scale into that over $1 million mark because the original developer did a phenomenal job at making a small-scale prototype, which we all loved. We approached him and said, what will it take to make this into a proper AA level experience? And he said he needs a team. So we hired a team. Right now, there are close to 12 people working on this project, and there will be announcements on the release plans of this coming quite soon. Okay. More gifts. Just a couple of words about our strategic events business. And Larica, the person who runs it, she was supposed to be here, but BAFTA prints physical tickets, and someone had to go get them. So a couple of words about the business. We have actually invested into events, into a conference business, which gave us a unique position to see a lot of content before it is out there widely known, and also to position ourselves as a thought leader, sharing our knowledge and experience in a very open fashion. We've actually signed over 30 titles that we discovered at this event and hired over 50 people into our company, as you can see by the picture over there. That's us in Vilnius, Lithuania, where 750 people attended the event. And with that, I will do a very smooth transition because at DevGam, I met John, who was at the time working at Twitch and now runs our very exciting project on Hello Neighbor called the animated series. So I'm going to give the microphone to John.
Absolutely. Thank you. Thank you guys for having me. Thank you for joining us today. A little bit of background about myself as I jump into all the cross-media awesome things that we're working on. My name is John Carnage. My real name is Jonathan Joyce, but I go by John Carnage because that's my stage name. I started out as a streamer in 2008, 2009 on a small platform called Justin TV. In the course of my streaming career, I created a channel that became quite popular. And while my channel became super popular, the creators of Justin TV asked me to join them and said, hey, can you do that you've done in your original channel on our platform? I said, yes, of course. I was hire number 40 at Twitch. So I'm one of the founding Twitch team members over there. And it's been an incredible journey to grow Twitch. And in that process, I went to Cartoon Network, joined their sister site called Adult Swim, worked on a bunch of cool stuff over there. And now I'm here at TINYBUILD working on our, how are we going to do this?
I guess you need to.
Here we go. Finally, welcome to Ravenbrooks. This is Hello Neighbor. Welcome to Ravenbrooks. Ravenbrooks is the neighborhood where Peterson and all of the action actually goes down. So this is our first forte into a full animated series. There's 18 episodes. Each episode ranges in about 10 to 12 to 14 minutes. They vary because we are making this from the ground up in-house. We're working with an outstanding, stellar team. You may have heard of some of the stuff that they've worked on in the past. They are the creators of Big Hero 6, Ben 10, and the most recent one is Sonic on Netflix. So we're working with an outstanding team, and the best part about that team is some of the writers that, and I have the privilege of working with, are hardcore gaming fans. So this was an easy partnership for us to work with them because they got it right away. And so now as we dive into Ravenbrooks, we'll find out more about the mystery. It's not just a story about a creepy guy across the street that is stalking kids or kids stalking a creepy old guy across the street. This is a full story that gives a lot of answers to a lot of questions. And when you have a lot of questions that are answered, you get more questions. Let's go to the next slide. Oh,
Yeah, I don't think the video is going to.
so we released it. We released this in an early preview, and this is some of the early reception that we got. So we've been releasing these on YouTube. That's been the platform of choice for now. And when we released these in December, some of the feedback that we got was overwhelmingly positive. As you can see, 24,000 thumbs up. And the second one also with tens of thousands, thumbs up. So the comments are also overwhelmingly positive as well, and they're in the tens of thousands. The comments often say, hey, where's episode 3? Where can we get more of this? I love TINYBUILD games. I want to go and check out their website. All the positive stuff that is there is really, really warming. And so we've been creating content in a unique way, much like other people would create a commercial advertisement spent on a 30-second ad somewhere. We've decided to create cartoons and create an infinite loop that would be considered content at the same time it's maybe considered a commercial. And in this infinite loop, back from Hello Neighbor cartoon to Hello Neighbor video game to TINYBUILD as a platform for new games, back to the cartoon, this will be effervescent. This is going to be something that people will watch over and over and over again. So the reception has been outstanding. Let's go to the next slide. So the timeline for the show will be this year. We're going to be releasing this in 3 drops. We're going to stretch out our drops in 6 episodes per drop. And this keeps us going and keeps us in the minds of our fans. This cartoon is going to end on episode 6 with a great cliffhanger, same with 12, and our final with 18. We were going to stay relevant for a very long time because this is content that is effervescent and will stay with people, and our hardcore fans are going to get a bunch of content that they've been looking for a long time, as well as new fans that have never heard of this series. It's super important to create content that people will embrace because it's their first time seeing it. We didn't want to exclude anyone. So as Alex was talking about in a roadmap, my 5-year timeline, this is our timeline for this year with this single cartoon. And what he mentioned before is that it's easier to make an animated series because once we have these assets created, they can be reused over and over. A good example of that is how quickly The Simpsons can come out with episodes, how quickly South Park can come out with episodes. So it's just much faster and it's a little bit more predictable. Although development for this was pretty intense in the beginning because we had to get it right. This is Hello Neighbor. This is one of the most talked about franchises in TinyBuild's history. And it's also the most beloved. So we have to get it right. We have to tell a great story, and we are making that happen right now. So this is an interesting thing. Maybe I can get this point across digitally. But I've been working in pop culture for a really long time. I started out selling comic books as a kid. And what I've noticed as a kid, being an avid fan of comic books, as now an adult working in the games industry, I know what you see right here is both of these are arguably the most important of that thing. So most important comic book would be Action Comics #1, first appearance of Superman. And that is a graded issue selling for quite a bit of money. Now you look over at the other side, you see Super Mario, our first appearance of Mario, and in a sense, right? Graded, now worth $2 million. So what's going on with this, in my mind, and what I think I'm seeing, is video games are becoming this generation's comic book, where it took Superman 70 years to become a film, or maybe 40 years to become a film, a blockbuster film. Mario Brothers is now taking 35 years. You can forget about the one in the 90s and 80s. Let's talk about the new one that's coming out right now. Video games are this generation's comic books. The next mega IPs of tomorrow are going to come from video games, much like the mega IPs of today came from comic books. So there you go, Alex. You want to take it away?
Yeah, thanks a lot, John. I think, just to reiterate, the story for TinyBuild has not changed. We're doing what we set out to do, and we're more confident than ever that we're going to be able to achieve it. So I'll just reiterate that TinyBuild is a global video games publisher and developer. We focus on owning intellectual property and scaling it to franchises that will exist on multiple media formats that will hopefully outlive us as a generation. Because my goal is to build something today that will scale to mega blockbusters. And as John said, we believe that the timeline of unlocking IP value is accelerated today. So the things we will make today in a decade, 2, 3 from now will still be remembered and will be bigger than ever. With that, I do see that we have quite a lot of questions, so I'll just put this slide up, which I'm legally obligated to do.
Perfect. Alex, let me just jump in just to give you a quick break and thank everybody firstly for all their engagement this afternoon. You're quite right, you've received a number of questions, but just while the company, just take a few moments to review your questions that you've submitted today. I'd just like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, will be accessed via your Investor Meet company dashboard. Alex, as you can see, those pre-submitted questions that you have in front of you, thank you to the investors that sent those ahead of today's call. But if I can just hand back to you to maybe read out those questions and give a response where it's appropriate to do so, and then I'll pick up from you at the end.
That sounds great. I think one of the questions that we should address head on is someone asked, Alex, can you please talk to us about the launch of Hello Neighbor 2? It seems you rushed the launch, overpromised, upset and alienated gamers, quality glitches, etc., etc., etc. So this is a really interesting question, because to the person asking us and who people under the impression that we might be disappointed with the launch, I would highly advise you to look for articles from 2017 and videos from 2017 about the original game's launch, because the original launched to similar criticism from mainstream media, especially from review magazines and press. And the thing is, Wired magazine called it the worst game of 2017. And when I talked to the, a year after that, I talked to the author that wrote that review, right? And no disrespect or aggression from my end. I was like, how did you like the ending of Hello Neighbor? And he said, oh yeah, I like, this is what happened. I was not happy. I was like, you didn't beat the game. He's like, what? I'm like, you did not beat the game. So what I would advise people to do is watch story explained videos for Hello Neighbor 1, Hello Neighbor 2, Hello Neighbor Hide and Seek, the prequel, and Secret Neighbor. Because unfortunately, there is limited data points. And when you look at a game like Hello Neighbor or Totally Reliable Delivery Service in our portfolio, you might be using Steam data as your reference point. And for the 4 games that are out in the Hello Neighbor franchise, Steam has been the smallest platform by far. The game is a console game first, It's also got a huge following on mobile. In fact, over 100 million downloads on mobile. And what I'm getting to is that the target audience for Hello Neighbor does not need to be told if it's good or not by someone else. They decide that for themselves. And everyone who don't necessarily understand the franchise or why it's so entertaining to be part of this community, it's easy to be cynical because that drives a lot of clicks. You make a video about why Hello Neighbor 2 is bad, it becomes the most popular video on your YouTube channel. Seriously, look it up. Just search for Hello Neighbor bad or something like that on YouTube, sort by views, and then go to the channels and check what is the most popular video on that channel. And not to be cynical or anything, it's just the reality of this, because the enjoyment of Hello Neighbor comes from being part of the community and knowing how the game is made. That's part of the game. And I will not spoil the true ending of the original Hello Neighbor. Please look it up. Just search for true ending of Hello Neighbor, and you'll understand why a lot of people are so excited. That said, it landed exactly within our financial expectations, and we built a platform that we're able to deliver a lot of quick updates to. So it's been 14 weeks since Hello Neighbor 2 is out in the market. We delivered 6 updates. We came out on day 1 on PC, Xbox, PlayStation, current on last gen, and Nintendo Switch. The original came out on PC and Xbox, and then took 2 years to get to PlayStation and Nintendo Switch, and took a year before we could update it. That said, we're very happy with the release of Hello Neighbor 2. Please do not use Steam as the only data source for that, and please look at things like Google Trends that show you exactly how popular a franchise is. And right now, our internal data suggests that players have enjoyed the game and are spending a lot of time in this world. That said, which question should we jump into first? Jazz, this is on you.
Got a list of questions here.
Go ahead, please. Thank you.
Karen, continuing with you, Alex. You mentioned bigger budget games. What is the typical budget for a new game these days? And do you see a correlation between budget, size, and return?
Right. So we used to be right around 500K up to $1 million. Right now, we have quite a few titles that are over $1 million. And the reason we're confident in that is because we have had 3 games in a row prove that we're able to deliver and have a significant ROI on those. The reason we're doing that is, well, because we can, but also this allows us to deliver games to more platforms, which costs a lot of money, and to create scope for these projects that facilitates over 100 hours of gameplay. We see a direct correlation between how much time people spend in our games and how much money and long-lasting revenues they create.
Next question is specifically on disclosure of consensus, analyst consensus in the trading updates, and possibly adding a small broker that could publish their research for free. I'm going to take that one. We technically can't disclose analyst consensus without being seen as using that as a guidance. So it is a choice. Some companies do that, but they officialize that as a guidance that we don't have. So that's not something we can do. And in terms of adding more coverage, we are, for our size, one of the most thoroughly covered companies by equity research analysts. We keep working on that. We do expect more brokers to come on board, but it is somehow out of our hands. Next question is for Tony. Amortization period moved to 3 years. Can you confirm whether this is straight line or front loaded?
Yeah, so the amortization is going to only be for owned IP. Third party is still dollar for dollar. But the amortization is heavy on year 1 and 2 and reduction in year 3.
Okay, thank you, Tony. Another one for you. Can you give us a size for the capitalized dev cost that went into the Hello Neighbor animation? And the follow-up for John, how do you intend to monetize that?
Regarding the size, in terms of the overall investment, it's still a non-material impact regarding the rest of the investments we've done. The exact size is confidential given it being
sensitivities.
Yeah. And with that, I'll give it to John.
Well, in terms of monetization, Alex, how do you want to explain this?
Well, so we have the worst case scenario is that we publish it on YouTube where most of our users are anyway, right? We're exploring a lot of opportunities right now. And in the worst case business model, it makes its money back, right? But it's not our core business. It's great that it makes its money back, but its sole purpose is to elevate the brand and to drive game sales, right? So we use this as a marketing tool first and foremost, or as a canonical commercial, right? The example was TV shows or cartoons and toys, same logic applies. You don't make a Transformers cartoon to make money off it, you make money off the toys. We make money off the games.
Great. I'm going to take the next one. It's about dilution from the fair consideration of M&A, whether we have any mechanism in place to reduce that dilution as the price fluctuates. Yes, we do have in every M&A agreement, we do have an anti-dilution clause. So when the price goes below a certain threshold, we have options and the freedom not to issue shares, even if that is part of the compensation, and to use other means for paying the total consideration. Next question is on for Tony. Revenues from own IP decreased in 2022. Can you explain why and what you expect for 2023?
Yeah, in 2022, we had some extended life monetization events, such as for Graveyard Keeper, which is a very strong third-party game that we have in our portfolio, as well as the launch of Asterigos, which is one of the higher budget games we've released that have had positive ROI, which is also a third-party game that we have in our portfolio. Regarding going forward, we don't give guidance on future numbers. That being said, we'll continue to do monetization events when it makes sense, even if it's a third-party IP.
That's great. Thanks, Tony. Alex, you've been very close to the situation in Ukraine and helped the first time to relocate staff both in Ukraine and Russia. What is the outlook in terms of further charges for the conflict in Ukraine?
Right. Well, no one can predict what is going to happen. What we did last year was make sure that development continues, and we have given you a glimpse of some games that we'll be announcing this year coming from the studios in Ukraine. Moving forward, it was all about setting up a prep plan for any scenario that happens to make sure that people are safe. So we can't give a definitive answer because that is outside of our control.
The next question is, in my view, somehow related. Can you tell us about the employee churn at TINYBUILD? Can you see that stable, improving? And what do you think in the future?
Yeah, so our churn is still low single digits. And what we're seeing is when you look at it under the context of at least 2 year development cycles, you need to be 100% confident in all of your people involved with publishing. Because the decision you make today, you will feel as a business 2, 3, 4 years from now. So you can't have a high churn in the publishing business because people will make this decision today and then others will have to live with it, right? Everyone loves making decisions. It's about the longevity of following through with those decisions. Oh my God, you're scrolling. We still have a lot of questions. Oh, you wrote a lot of those down, I see.
Yes. The next question I'm going to take is on buyback. If we have considered buying back shares on the market, given the low levels of the stock. Yes, we have considered it. We have a lot of opportunities for investments in the business. We are very, very close to shareholders. As you know, Alex has a 37% stake in TINYBUILD. So we went for a middle ground solution, which is setting up an employee benefit trust, which is currently buying shares on the market. We have spent so far just short of $500,000 on that side. But we have to balance the different opportunities of investing for growth versus buying back shares on the market. Next question for you, Alex, on Mr. Beast. Can you tell us the thinking behind it and the impact we had on the franchise?
Right. For context, Mr. Beast, it's the biggest YouTuber in the world, and we partnered up with him so that they could build the neighbor's house and drop a meteor on it to see what happens. It's one of the bigger viewed videos on his channel, and the logic here was to support the launch of Hello Neighbor 2, and also that unlike traditional advertising where there is a start of your campaign and an end, this video will live on for years. So we have seen an immediate impact and a residual impact from that video specifically. And we're looking forward to a lot of interesting collaborations like this in the future.
Thank you. Next one for Tony. The development spent in 2022 was high at 36 million. What do you expect in 2023?
Yeah, so one thing to reiterate when it comes to the development cycle of games being between 2 years to 4 or 5 is essentially anything we invest that we invested at IPO started coming through the company in terms of to market late last year. It's difficult for us to commit to development spend in terms of the end of the year, since that could limit our growth. That being said, the expectation is by the end of 2024, the part of the business regarding what's on the balance sheet as well as cash spent for investments as a percentage of the revenue and percentage of our profits will essentially mature and be much more sticky in terms of what's on the balance sheet as well as the cash percentage outflow.
Perfect. Thank you. The next one I'll take. It's been a question we had often on the IR email, which is about a persistent large seller on the shares and the absence of an RNS. So any holder in the UK that goes through certain threshold, 3, 4, 5%, and so on, has an obligation as a shareholder to issue a notification to the market. The obligation is not on the company, is on the shareholder. Nevertheless, we have checked whether all of the obligations have been respected, and we can confirm that that is the case. So on our website, on a shareholder page, you find our largest shareholders, including Alex and institutional investors. There has been no change on that. For sure, none of the management team has sold any shares. Next question is on dividends. Please explain why TINYBUILD is paying dividends to the company.
That is not the case.
Tony, for you.
So regarding the dividends that were paid to DevGam, it was associated with the prior year. And this has to do with just the interest between the company and us owning the majority while still having its own people.
Next question is for Alex. Can you tell us about the balance between growing the core business of video games, publishing, and studios versus studio for hire as Red Cerberus?
Right. Red Cerberus is an exception to the strategy, which is a strategic acquisition to have testing capacity when we do need it. The core strategy is still the same. It's about publishing our own intellectual property, and some of the auxiliary businesses are strategic. I'd say that right now it's Red Cerberus, DevGam, and our cross-media business that are the strategic aspects that help us grow the core business.
Okay, thank you. In terms of cash utilization and cash allocation, Tony, can you guarantee us that it's the right balance in terms of safety for the financial position and growth, i.e. that we're not growing too quickly, burn through cash, in other words?
Yeah, so regarding the cash burn, we have financial controls in place in terms of monitoring the cash that's required for operating businesses versus the investments. We monitor that pretty regularly and closely. And the whole commitment that we did to the market was to invest wisely regarding not just the public funds, but continuously reinvest the company profits back into the business. and that's what we are doing.
Okay. Now a question for you, Tony. There has been a write-down of goodwill for Versus Evil Android Cerberus acquisitions of number 21. Can you tell us the rationale and the impact on P&L and cash flow?
Yeah. So regarding the write-down of Versus Evil specifically, the revenues were healthy. They were what we expected. However, in terms of the margins, that's where they had underperformed. When it came to the consideration or the total earnest that they were looking at for that acquisition, it was to help motivate them to correct the margins in the first year, given how development cycle of video games take anywhere between 2 to 4 to 5 years. That earnout that had hit was missed. So in terms of the write-down, it was also balanced out by the release of that liability, of that consideration, which had an immaterial impact in terms of the P&L.
Okay, the next question has already been answered, but just in case, we have an anti-dilution system in place for any M&A, so the volatility on the stock price is not going to cause excessive dilution in terms of earnouts. Next questions in terms of revenue diversification. While this does seem prudent to strategy overall, it's naturally important not to spread. Since I understand, so can you tell us about the departure of your COO, the process of decentralization, and how you look at a potential replacement or not?
Right. So what happened in the beginning of the year is our CEO and co-founder, Libertis, had a kid and went on paternity leave. The guy has been on holiday for 10 years, so he really deserved it. And what we did is we used that as an opportunity to start testing the decentralized model. We knew it was going to be where we go as a company in terms of direction, and this gave us the opportunity to really stress test it. And going through it, Luke's position essentially became distributed between several other people. And this has actually worked out quite well because the company is very global, and I counted 9 time zones that we operated. And for a single person to be a bottleneck for so many time zones, well, we attempted to do it in the early days, right? I was on the flight pretty much every week. It's not sustainable long term. So going for the decentralized model made a lot of sense. And Luke has decided that he wants to spend more time with his family. We came to this decision in over a year of iteration because Luke was ready to jump in when we were decentralizing. That said, the reason there is no longer a need for a centralized function of a COO is because the job is distributed and people are able to make a lot of decisions. We do have general managers for a lot of our studios, and those perform the role of mini COO or, well, the GM, it's in the name. So right now, we do not see that as a potential challenge. We actually have been pleasantly surprised by the level of ownership that people get and how they maintain that ownership and accountability.
Brilliant. We're left with only 2 questions. Looking to close bang on time with the time allocated. One for Tony. In terms of employee compensation targets, how do you see using EBITDA and revenues versus EPS in order to avoid excessive dilution?
Yeah, we don't necessarily disclose as to what we use to measure employee compensation. What we can say is that we look at the more meaningful impacts regarding in terms of what earns that compensation and compensate quarterly based off of quality of their skill.
Thank you. And the last question for Alex. I don't see any new question. Alex, you are a shareholder. You've been feeling the pain like many of the people online. Would you like to buy shares now?
Yes, I absolutely would, and expect measures to be taken that would allow me to do so at a general vote. Because right now I hold over 30% of the company, therefore buying any share would trigger a takeover event. So I just to put it on the record, I am really excited about the opportunity of buying more shares. And there was another question today, not as part of this, but I think it's relevant. Well, the price is low. Why are employees not buying it? Well, because we don't have that many people in the UK where it's actually super easy to buy our shares. And we're in the process of helping our employees set up processes so that they would be able to do so. Because just yesterday, a lot of people came to me and excited about where we are as a company, and they were like, how can we buy shares? Okay, you're in this country, this regulation applies, so we're in the process of figuring that out. And that was the whole reason we decided to go public, is to enable all of our people to be able to share the success of the company.
Operator, over to you.
That's great. Thank you very much indeed, and thank you for taking your time with the Q&A. If any more questions do make themselves available, we will definitely send those to you post today's call. Alex, I know investor feedback will be particularly relevant and important to the company, and I'll shortly redirect those on the call to give you their thoughts and expectations. But if I may, before doing so, if I could just ask you for a couple of words and a few closing comments.
I think I am extremely excited where we are now, and just on the concerns part of some people was the share price, I want to reiterate that there was a week last year in at the end of Q3, beginning of Q4, where everyone profit warned and a lot of people expected us to profit warn. We did not do that. In fact, we have landed broadly in line with expectations in a very tough market while playing this game on extreme difficulty. So now just imagine what it is going to be like for us when we're back to playing on normal or easy mode, when things change. And it's usually darkest before dawn, so I'm really excited about when it does, when the sun does go up.
That's great. Alex and to the team from TINYBUILD, thank you very much indeed for your time this afternoon. Ladies and gentlemen, please do not close this session, as we're now going to automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of TINYBUILD, we'd like to thank you for attending today's presentation. May I wish you all a very good afternoon.